What's going on, everyone? Hootmoney here with another video for you guys today. Today, we're going to be talking about Aterian or ATR because it is currently down 15% on the day. So I needed to bring you guys the emergency update, tell you guys exactly what I am seeing in this play, and we can go from there and see whether or not it's a good hold, buy, or sell. But remember, I'm not a financial advisor. This is not financial advice. So do your own homework, do your own research, and make your decisions on your own. Never bet any more money than you are willing to lose. All right, so drop a like on the video if you guys enjoyed this content. Subscribe to the channel if y'all are new. We just made a new play in Hootmoney Trade Alerts. If you want to join Hootmoney Trade Alerts, it's that first link in the description down below. But without further ado, let's get right into the video. All right, so as you guys can see, we're looking at the daily chart on Market Cypher. It did give that red dot as of yesterday, which I did say is probably the biggest risk because that usually does indicate that momentum is drying out. And as you guys can see, it did get the red dot before the Hootmoney candle turned red. So if we're just looking at this is Hootmoney candles. This is a momentum trading type of candle. If we're going back here, if we're looking at actual candles, it's a lot different. So momentum was still on the upside as of yesterday, according to the Hootmoney candle, right? It stayed green, but today it is red. So this means that momentum is now currently pointing to that downside. Now, what's really important for ATER is to understand what type of patterns are going on with this chart setup. All right, so what we have is an accumulation pattern back here and a distribution pattern back over here. So the most recent pattern is the distribution, and before the huge pump up all the way to 7+, that was accumulation or reaccumulation. So you have to understand and recognize these patterns when trading, and I even brought up distribution yesterday, how I thought this could be in a distribution pattern. So you have to understand these things while trading. So the reaccumulation, essentially what happens is the stock comes up, it trades in the channel, it tries to break out, it doesn't break out at first, it basically trades flat and slightly down, and then it breaks out. So essentially what happened originally is exactly that. It traded this channel, it breaks out, gets rejected, right? Then it has this spring where it goes underneath the channel, then it comes back up, and then boom, it goes all the way back up, and then it breaks out, and then it sees new highs. So this is reaccumulation. It's very similar to the accumulation pattern. So understand this, guys. Wyckoff accumulation, and then Wyckoff distribution. Wyckoff distribution is very, very similar to reaccumulation, but there are a few differences. So the spring sector, or the selling climax, or whatever you guys want to call it, where it basically goes below the support level, this comes earlier in reaccumulation, or in distribution, excuse me, rather than reaccumulation. When it dips below the support line, or the spring, essentially that's what it's called. It's where it goes down really fast under support, comes right back up. That comes later, and it usually comes after a breakout, right? It comes down, the spring happens first before there is a breakout. So what we saw in ATER, obviously, is it came up right here. This is its resistance point. It used that twice as resistance, and the selling climax was right here. It was very early on in this pattern, and then when it finally did break out and it was not able to hold the resistance line as support, that was what was basically telling me, okay, well, this could possibly be in a distribution pattern. As you guys can see, what ends up happening in a distribution is it breaks out to new highs, it settles down, and it comes down. So it almost perfectly followed reaccumulation and distribution, and that's what I really wanted to make this video the theme of this video about, because we see this pattern all the time. If I just bring up BBIG's chart, it had distribution as well. If we look down here, this was set up a bit differently. The spring actually came a bit later, so it looked a lot more like reaccumulation at first, right? Where it breaks out, comes down, has a spring, right? But BBIG was not able to hold, and usually what happens is if it can't hold this resistance level as a new support level, so the resistance level turns into a support level. If it can't hold that, that typically means there is some more downside risk. And as you guys can see, there was some more downside. So moving back into ATER, I'm not saying it's going to play out exactly like BBIG. They're completely different plays with completely different setups. Altogether, different short interest, different potential for delusion, all that stuff. So I'm not saying it's going to play out exactly like that. And if anything, I do think right now at the current price point, it's more likely to bounce than just keep selling off, right? But I do want to show you guys these patterns because they are extremely important, and you can cross-check that obviously here with Market Cipher. Market Cipher gave the red dot signal at the exact same time. Moving into the 4-hour chart here on Market Cipher, it did get the red X. That typically means that there is some more downside risk throughout the 4 hours, though it is giving different signals. So if we break it down to the 1-hour chart, it is showing that it is going to get that oversold green dot signal, which is typically a good signal. You also saw that it bounced off the fib level, so 479 is a solid bouncing point, so that's something to be watching out for as well. But yeah, so with that, the 4-hour chart getting the red X, it does it does show that potentially momentum is definitely slowing down in this stock. And even if it doesn't completely sell off down to like $4 per share, let's say, it could just chill out and settle down at the fib level, you know, before it makes its next little run back comeback. But with all that being said, nothing has really changed about ATER in the fact that it's still set up better than any other stock. I mean, it's had a very large rally. It's still up very, very high. The only thing that can potentially take this down is people selling their shares, and again, momentum drying out, people just not buying back in. And typically what happens is when something does become a very good short squeeze play, it becomes more of a chase. You'll see it here on Fintel. ATER is number 1 on the Fintel leaderboard. A lot of the times when a stock has a really, really good short squeeze setup, it also means it's overbought, and if it doesn't squeeze, it adds on a lot of risk, which is why I didn't buy into this in the first place. I gave you guys that example of GameStop, right? If we look at GME right here, and we go back all the way, it's going to be a while here, but we go all the way back to January. You could have sold when you got the red dot signal here. You could have bought in on plenty of dips on GME. I mean, there was plenty of dips. Right here, it went from 20 down to 17, right? Right here, it went up to 20 one more time, back down to 11. That was like a 60% dip. But the short squeeze was pretty obvious and apparent when it did come, and those red dot signals really just didn't mean anything. So ATER could be doing the exact same thing. And honestly, I think if there was a play, if there was a stock to do something like that in the current market, it's going to be ATER, just because the statistics are so well. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're running a promotion where you deposit $1 on their platform, you get up to $7,000 in free stock. It's an absolute no-brainer if you guys have not signed up already. Again, all you gotta do, click those links below in the description or pinned comment section to sign up for Moomoo. Deposit $1 on the platform, you get up to $7,000 in free stock. They also gives free level 2 data, so you're not gonna have to pay for it elsewhere on another platform. So you can think of it that way too. You're depositing $1 to literally get free level 2 data for eternity and never pay for it ever again. Unlike Robinhood, unlike Webull, unlike pretty much any other brokerage. The link's in the description below, and let's get right back into the video. So let's just quickly go over the delusion. As you guys can see, they do have these outstanding warrants, but they have an exercise price of 25 and 15. They also have these warrants from March that aren't active until September. So that can't possibly affect the float of this stock. They have an ATM that was terminated a while ago, so that can't possibly do anything. And then they have this shelf registration from 2020 that they've only really used 33% of. And this is a company that's investigating naked short selling. They hate short sellers, so they're by no means gonna just use this shelf to dilute shareholders. I mean, I highly doubt it. The whole point of a shelf offering in the first place, and again, guys, remember, this is from 2020. They've only used 33% of it. The whole reason that you have a shelf offering in the first place is so that you have lots and lots of time to, you know, slowly roll out and slowly raise money. It's not something to just dump on shareholders, which is a lot different than an ATM. An ATM essentially means that the company is likely going to be selling stock while the market is open. So a shelf is not as dilutive as an ATM. So just understand that the shelf is not a huge deal. So other than that, I mean, it really can't be diluted. Its float went from 40 million to 28 million. So it's truly set up very, very good. And that's why it is number one on the Fintel leaderboard, because the setup that we have on ATER is absolutely insane. But again, I have to mention, just like I was saying earlier, once it gets to that number one spot, it becomes increasingly risky, because again, it is that chase and you need the short squeeze. You need the actual short squeeze to play out. So it's really a question. Do you guys think these shorts are going to cover? There's 10 million, 0.56 of short interest. It's on the threshold list. It's very high cost to borrow, very high utilization. Nothing really compares, right? They got the trifecta signal as of yesterday, a type 1, a type 2, and type 3 short squeeze signal, right? So we're used to a market where the number one short squeeze signals have not been playing out, right? But we have to understand, if there is going to be a short squeeze in any stock in the stock market, I seriously think it's going to be ATER. There's really just nothing that compares. It's not something I'm playing. I don't have the risk tolerance for it right now, but you have to understand, if there is a GameStop like stock in the stock market right now, it's ATER. I just have to keep repeating it because it's true. It's true. Betting on a stock to short squeeze is super risky. Just look at all of the plays that we have seen over the past year. Literally, there has not really been too many short squeezes, right? So the odds are not in your favor for a short squeeze to actually occur. And this is important because eventually, if you keep buying the number one Fintel short squeeze stock on their leaderboard, you're going to get hit with some minus 30%. You're going to be hit with even minus like 60 or 70%. But there's also going to be ones that go up 200, 300%. But those are few and far between. So I hope that clarifies to you guys why I'm not currently buying in, but also have this like conviction that if there was a stock to squeeze, it's going to be ATER, because I know that is something that just sounds very contradictory. All right, so analyzing the unusual whale options flow, it was still absolutely insane, and it was a very bullish. We're doing the exact same filters as always, 10,000 premium or more, ask side only, calls and puts, so just the straight buying of calls or the straight buying of puts. And as you guys can see, it's overall 74% bullish. Now, what we can see right here is that if we do the bid and the ask side, we see selling and buying of calls only. We can see basically an estimate of what people are doing. Are they buying calls? Are they selling calls? And it's slightly in the direction of buying calls. So this is a good sign. The historical flow is showing that there is less call option volume overall today. I mean, it typically does align with red and green days when you do see the highest call option volume. And when call option volume is high, it generally does lead to more risk. I mean, if you're just looking back here to September, when call option volume was high, the exact same thing happened. But that would also imply that this current movement plays out exactly like it did in September, which honestly, I don't really think it does, right? We went over max pain and those statistics yesterday. For 422, it's at $4.50. It's at $4.93 right now, which does imply some downside risk, but the last 2 weeks, it has been beating the max pain. So it can definitely continue to do that. You got to remember, weekly call options, they're super risky. You do you, I'll do me. I don't buy those weekly call options. It's not financial advice. And we also got the absolute Megatron gamma ramp there for ATER as well. And speaking of the gamma ramp, we're just looking at the April 22nd expiration, which is in 2 days. You guys can see the profit loss of these call options pretty much across the board. You're losing at least 30% a day, a little bit less if you guys go in the money, but still, weekly call options are extremely risky. And this ties into my whole point yesterday in that retail needs to hedge with puts. If you're just looking at weekly put options, I mean, they're up 70% today. So if you hedged with a put option as of yesterday, you're not even losing money. You're essentially breaking even to some extent, depending on what put option that you're getting, and it's softening the blow of today's loss. And what that does for a short squeeze is, if all of retail has a softened blow, right? If they're making money on your put options while the actual shares that you own are going down, it puts way less pressure on you to actually sell off your shares. And what is a short squeeze? A short squeeze is when short sellers have no shares to cover, so they have to cover at any price that basically gets registered in the system. Whatever people are willing to sell it for, that's what short sellers have to pay. So if there was a system that we could do to actually hold these shares and not actually sell them into weakness, then we can win these short squeezes, because the alternative is to buy shares and also buy calls. But now you're extra over leveraged. You're losing 15% on your shares, and you're also losing 70% on your calls. So you're way more likely to get shaken out. You're way more likely to sell that call for a loss or sell your shares for a loss, because you don't want it to just keep going down and you keep losing money. How do we combat this? We combat this with put options. And as you guys can see here, it most certainly softens that blow and allows you to keep holding your shares strongly and can continue your short squeeze proposition. Anyways, my friends, that's about it for the video. Hope you guys enjoyed. As always, drop a like on it if you guys did. Subscribe to the channel if y'all are new. Check out Moomoo if you want up to $7,000 in free stock as long as you deposit $1 on their platform. That's the second link in the description, or first link in the pinned comment section. And sign up for Hootmoney trade alerts if you guys want the plays. You guys want to get rich with Hootmoney. We just made a new play. That's that first link in the description down below. That's about it. I'll be seeing you guys next time.